G'day everyone, welcome back to Pete's Investing. It's August 23rd, 2023. Here we've got the daily of the natural gas chart. So we've got the, you can see here we've still got this bullish divergence versus the price, and the price has been fluctuating within this resistance and support area. The resistance at 30.50 and support at 20.65. It's been that way for months, and we did draw a Fibonacci retracement to that recent high, and that'll be our earliest or closest target range if it breaks above this resistance. Now you'll notice the CCI is still advancing to the upside, and likewise the stochastic is also advancing and broken up through its moving average. So that's a positive. That's just a quick summary of the daily for those that are already familiar with it. Then we've got the hourly. Now the hourly has got a fresh divergence building, and it's just started to build. Now you can see there's a bullish divergence on the CCI versus the bearish divergence or the bearish movement there on the price. Now of course if the price falls and the CCI falls, the CCI needs to fall below that point there to invalidate it. So long as the CCI stays above that point there, the price can fall, then the divergence is still valid. So at the moment we'll keep an eye on it. It's just freshly broken out. We'd like to see it break as in terms of a target or an entry level. If I drew a, there's a couple of ways of doing this, but let's say I like to pick a recent touch points like that. You can see there that trend line touches those tops. I'd probably like to see it break above that descending diagonal, somewhere around there, and that'll be the entry. So, and in terms of a target, we generally draw from the lowest point. Now assuming that is the lowest point, because again it could always rise, it could always fall further, in which case we'll readjust that Fibonacci. And we take the Fibonacci back to the recent high before the divergence started. So in this case I'd go back to that point. If the divergence started back here somewhere, I'd take it to that point there. So that's the recent high, and so we enter there, and our target would be, let me draw another little target pattern. Now again, I'm using very conservative entry and exit points. Of course, it could go much higher, and of course, if it breaks above the 60%, then we're looking at further upside. But especially if it breaks above that resistance, as I said, on the daily, then we're going to see it break much higher than and hit our daily divergence target. So that's a very small gain. Again, I use very conservative entry and target levels. You don't want to get too aggressive and aim for a target up here, because it doesn't always go that way. Sometimes most of the time these divergences are just little retraces to the upside before making further declines. So that's it. To understand how to trade some divergence strategies and also some trend trading strategies, support us more on the Patreon page. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.